The day-to-day responsibilities of an investment banker. This is lesson 2 of class 1. In this lesson, we will review the high-level responsibilities of an investment banker, differences in responsibilities based on team operations. Background. At a high level, investment bankers represent clients in the capital markets and advise on a wide range of transactional services. Practitioners' responsibilities include any activity that supports a client mandate, from client origination to deal execution. Because of the complexity and length of a capital markets process, some banks compartmentalize operations. For example, some practitioners might support origination, while others might support execution. Therefore, the day-to-day responsibilities of the practitioner is dependent on the team that he or she is supporting. Some banks have a wide array of different teams that support very specific functions, while other banks have only a few practitioners in total that share responsibilities across all client mandates. Size taxonomy of investment banks. The structure of the bank is largely a function of its size. The larger banks have more siloed operations, whereas the smaller banks have more shared roles and responsibilities. Investment banks can be broken down by size into 3 basic categories. Bulge bracket banks are the world's largest banks that employ hundreds if not thousands of practitioners and support staff, taking on the market's largest and most complex deals. Middle market banks are large from a regional perspective and offer a wide range of transactional services, but relative to bulge brackets, these banks advise on less complicated deals. And then boutique banks, which are much smaller entities relative to bulge bracket and middle market banks. Boutiques typically run a very lean operation and take on smaller deals, but usually specialize in a particular industry niche or transactional service. Specializing in a specific industry niche or transactional service can help establish brand identity as the market's premier provider of its respective niche. Why does bank size influence job description? Larger banks with more siloed operations have distinct teams that support deal flow in different ways. For example, there are responsibilities based on client engagement. Deal origination. These bankers are responsible for winning client mandates and developing new business. Deal execution. These bankers are responsible for managing and executing capital markets processes on behalf of engaged clients. Responsibilities based on deal execution. Some bankers in deal execution focus on M&A advisory, and these team members are responsible for executing either buy-side or sell-side mergers and acquisitions mandates. Some bankers are capital market advisors, and these deal team members are responsible for executing capital markets mandates from either an equity capital markets perspective or a debt capital markets perspective. And then there's responsibilities based on coverage. So this could be industry coverage, and these teams are focused on executing mandates in a specific industry. It is not uncommon for practitioners at boutique banks to support all aspects of operations, from client introduction, client engagement, all the way to execution, regardless of deal type or client sector. The general day-to-day. Core responsibilities of an investment banker can depend a lot on different variables, as mentioned in the previous slides. Another important note is that the day-to-day responsibilities also depend on seniority. At a high level, examples of day-to-day responsibilities include creation of pitch materials, creation of marketing materials, creation of buyer/investor list, cash flow modeling, financial valuation, equity research, client prospecting, networking activities, deal structuring, answering investor due diligence requests, and the creation and management of virtual data rooms, also known as VDRs. Thank you for tuning into this lesson, and we look forward to meeting you in the next lesson, which will be set on important skill sets of an investment banker.